Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for coming on today.
Good afternoon.
Well, let's start with Wall Street, coming off the Fed's latest meeting and with the ongoing situation in China, of course, with the real estate conglomerate Evergrande. Stocks closing much higher on Thursday and almost getting back to where we were earlier this month. Jerome Powell saying an announcement on tapering could come soon, and it seems maybe the market's okay with the idea. What's the story in the global markets?
Yes, if you look at the U.S. market, it sharply risen for the second consecutive session on Thursday. Dow was up about 500 points, and S&P 500 was rising by about 1.2%, and NASDAQ added another 1%. Clearly, investors were concerned about the Evergrande debt crisis at the beginning of this week, but it seems that people are thinking that it can be contained. But in the afternoon today, we saw quite a bit of volatility regarding the Evergrande debt crisis. They're saying that the Evergrande did not pay the interest payment that was due. Anyway, volatility continued to remain quite strong. But as far as the U.S. market is concerned, they were taking this news wasn't really impacted at the time. So market continued to go up higher with the news coming from the FOMC statements that yes, tapering might be coming in as end of November or at the end of this year, but there's a slowdown in a sense that the inflation pressure or the labor market might not be as strong to result into the rate hike that Fed might not be doing it anytime soon. So when we look at these initial claims for the joblessness, we saw that second week of rising trend, and also the service PMI number came out, and it slowed down in the September. So clearly, it is indicating that the pressure on the inflation side might be subdued, and then if the economic growth rate is slowing down, there might not be a need for rate hike. Tapering might happen, but maybe in a slow pace than most people are expecting at this point in time. All in all, we did see most of the sectors showing quite strong rise, including the IT sectors and even energy sector with the oil prices rising. All in all, U.S. market was quite strong, but as far as the Asian markets today, it seems that market's been quite volatile despite the U.S. market being very strong.
Well, now an issue you mentioned just now in China, Evergrande, and it was supposed to make a bond coupon payment yesterday of around $83 million. As of a little while ago, still no word whether that happened or not. Perhaps you could update us, but some uncertainty here in the Korean market today, and some of that at least because of the rise in the coronavirus cases. So tell us about the domestic market.
Right. If you look at the Korean market, it started as quite strong, but ever since towards the end of the morning session, it did go down to negative territories, and it ended at slight negative territories for Kospi, and pretty much fairly flat. And Kosdaq was also fairly flat, slightly up but very flat. The retail investors and the foreign investors were net buyers, but the institutional investors were net sellers. The main reason for that is because clearly there's a possibility that the Evergrande Group did not pay the coupon payment, and that resulted into, if you look at the Chinese market, it did go from the plus to negative territories towards the end of the session, but not to the significant amount. All in all, I guess people are still continue to be concerned about the liquidity issues for the Evergrande Group, and I guess I think this is quite politically driven in a sense. We think that the government might be the one who will be taking over the operation probably, and maybe changing the management in the future with the current liquidity issues. I don't think that this is going to be a contingent problem that it might spread to the possibility of the Chinese market doing a recessionary picture, but I don't think that will happen anytime soon. Chinese government has ample liquidity and ample support and proper reserve to support the current property market. And if you look at the property prices-wise, it didn't go down. It's still going uptrend. It's about YOY 4% growth rate. So therefore, I think this is a short-term liquidity issue, a political issue that is resulting into the Evergrande, and that is affecting the Asian market of afternoon today. I guess in a longer-term basis, we need to watch out how this plays out. Nevertheless, we think that the Chinese currencies, renminbis, are fairly stable. Interest rates are very stable, and people are expecting the government will be stepping in to resolve these issues before the Olympics, the Winter Olympics in the early next year. All in all, we think that this is a short-term volatility issue rather than a long-term issue, and the default issue is not going to be long-lasting. A lot of people are saying that this may be a similar type of what we saw in 2007 of Lehman cases. I don't think that's the case. We think that this will be contained quite reasonably well, and therefore next week we expect the markets to recover from the quite volatility that we saw this week.
Well, staying here in Korea for a minute, the remarkable movements in the market we've seen in the pandemic have drawn in a lot of investors who are taking on as much debt as they can to buy stocks. Similar story in real estate, even crypto. In the Korean media, we hear these phrases about young people leveraging even their souls. What do you make of the risks out there, whatever they may be, from Evergrande to tapering, and how the added risk of debt figures into that?
Right. A lot of people are talking about the issue about the debt. There's always an issue about the debt with a low interest rate environment. But I think that what's important is what is the percentage of the debt versus the GDP number. If you look at the global GDP growth rate, with this kind of huge boosting measures that we saw, obviously that resulted into huge amount of debt increases for the government and most of the overall global debt. But at the same time, with this kind of boosting measures, that resulted into quite strong base case of the GDP growth rate. And therefore, if you look at the previous quarters of the global debt as percentage of GDP, global GDP, it sharply fell. If you look at the total global debt, reached about $300 trillion, but percentage-wise, the previous quarter was as 362%, which was the record high number. Now has fallen after 1 quarter later, even though the debt size increased, it fell down to 353%. We saw this kind of trend right after the Second World War, when we saw inflation kicking in and GDP growth rate rising, and debt size not rising as fast as these GDP growth rate, and therefore we did see global economy recovering in a sense that the percentage of debt falling quite sharply. We think that that can be happening again. A lot of people are concerned about this issue about this debt size. We should not be just looking at the absolute debt size, but what is that as a relative terms of the GDP. We think that when the asset value goes up, resulting into the lower leverage ratios, we think that that should be taken as a positive news, and it's not going to be impacting global financial market as most people are concerned about. If the tapering comes through, this is a picture where the abnormality becoming a normal stage. I think that when we really should be worried about is when interest rate hike happens from the various central banks. And we don't think that that will be happening anytime soon with this kind of debt size. We need to boost the asset prices and resulting into a lower leverage ratios. So in order to do that, we need to keep the interest rate low, and that's happening globally. And therefore, we think that the asset price rising trend should continue in the future.
We might end the conversation on that somewhat reassuring note, Mr. Yu, then. So we'll have to leave it there for today. And thank you, as always, for coming on and sharing your insights with us. We appreciate it.
Thank you very much. Have a great weekend.
You too.